actually unplanned vacation. So can I take this deduction? Hey everyone, welcome back to my channel. I am Noura al-Masri, a tax accountant and the founder of Noura's Books, where I help business owners stop overpaying in taxes. Summer is here, so I thought it would be the perfect time to talk about travel as a business deduction. And I'm going to start this video with something I don't do often, a confession. Last week, I went on a trip. I had an amazing time. And when I got back, I asked my Instagram audience a question. I was on a trip and I took some business meeting while I was there. Can I deduct the travel expenses? Here's what they said. 80% said yes. The other 20% said why not? Meaning they also thought yes. They just wanted to understand the reasoning. Not a single person said no. I want you to sit with that for a second because that tells me exactly how many business owners are walking around with the wrong understanding of this deduction. And that misunderstanding could cost you in an audit or cause you to miss out on deductions you actually are entitled to. So today, I'm going to break all of it down. Stay with me. Let me tell you what happened on this trip because the details matter. I went to Puerto Rico, beautiful place. I highly recommend it. While I was there, I took a few Zoom meetings. Now, here's the thing. These were not special meetings I arranged because I was in Puerto Rico. These were my regular meetings, the same ones I take every week, sitting right here at my desk. So when I asked my audience, can I write this off? They said yes. And I understand why. It sounds reasonable. You are traveling, you are working, you are a business owner. It must be a business expense, right? Wrong. I cannot deduct that trip. And the reason is not complicated once you understand the rule. The IRS does not care that you opened your laptop. They do not care that you were productive. What they care about is one thing. What was the primary purpose of your trip? I went to Puerto Rico to enjoy Puerto Rico. The Zoom meeting I took were my regular meetings, the same one I would have taken from home. They were not the reason I went, and that is the entire ball game. Let me make this very simple for you. For a trip to be deductible as a business expense, the primary purpose of the trip must be business, not partially business, not mostly fun with some business mixed in. The dominant overriding reason you got on the plane has to be a legit business purpose. Here's the test I want you to ask yourself every single time. Would I have taken this trip if there was no business reason? If the honest answer is yes, it is personal trip. And no amount of Zoom calls or emails you answered from the hotel room will change that. Now, here's where it gets interesting because I could have made my Puerto Rico trip deductible. I just didn't plan it the right way. If I had, before I ever booked the flight, reach out to prospects or potential clients who are based in Puerto Rico, set up in-person meetings with them, confirmed those meetings, and documented everything, the story would be completely different because now I have a business reason that is specific to that location. I am not just working remotely, I am there because of the business. The business reason has to be why you went there, not just something you happened to do while you were there. Let me give you some real-world examples of what qualifies. You speak at a conference in another city, that is a business trip. The reason you traveled is business, fully deductible. You fly to meet a client face-to-face, a meeting that had to happen there, business trip. You travel to a new market specifically to prospect. You set up 5 meetings with potential clients before you leave, and you document who you are meeting, when, what you are discussing, and why. That qualifies. You attend a business training, certification, or industry event in another city, that's a business trip. You go to a trade show, an industry summit, or a mastermind retreat, that is a legit business event. That's a business trip. Now, Here's another important rule. The majority of your days on that trip needs to include genuine business activity. If you are traveling for 5 days, at least 3 of those days should have documented business activity. If most of your days are personal, sightseeing, beach time, family activities, and you squeeze in one Zoom meeting, that IRS is not going to view that as a business trip. Intent matters, proportion matters, and documentation matters most of all. When a trip genuinely qualifies as a business trip, here's what you can deduct. Airfare for 100% deductible, hotels for the business days only, meals 50% deductible, transportation, car rental, ride shares, taxis, conference or event fees, business-related calls, and internet. What you cannot deduct: personal days and sightseeing, your spouse's or family's travel, unless they are a legit documented employee of your business. Luxury upgrades with no business justification. Entertainment that is purely personal. I want to say this clearly. Do not try to deduct a personal trip by calling it a business trip. The IRS has seen every version of that. The consequences, back taxes, penalties, interest, and the stress of the audit are not worth it. I want you to take every deduction you are legally entitled to. That is my whole mission. But it has to be real. I cannot tell you how many times I have seen a legit business deduction get thrown out in an audit, not because it wasn't real, but because there was no paper trail. Documentation is your protection, and it's not complicated. Here's what you need: who you met, names, companies, titles, when and where, the dates and location of each meeting, the business purpose, what was the goal of the meeting, what happened, what was discussed or decided. Save your confirmation emails. If you spoke somewhere, keep the event program. If you prospected, save the email thread where you set up the meeting. Take a photo of yourself at the event or with the client. Keep your receipts organized by trip. A simple travel log, even a notes app on your phone, can make all the difference. If you are ever questioned, just make sure it's something that you can easily retrieve when you need it. This is the step that separates someone who is protected from someone who is exposed. Now, I want to share something that most business owners have never heard of, and I want to be very clear. This is an advanced strategy. It's not for everyone, and it must be done correctly with a qualified tax professional. If you have a family private foundation and you travel for purposes that genuinely serve your foundation's charitable mission, that travel may be deductible through the foundation. This is not a loophole. This is a completely legit structure that many high-income earners and philanthropists use to integrate their charitable work with their life in a tax-efficient way. And I want to be very direct, the travel has to genuinely serve the foundation's mission. The foundation has to be set up properly and run with integrity. The expenses have to be documented just like any other business expense. This only works when it is real. If this is something you want to explore, this is not a Google search conversation. This is a sit down with your tax strategist conversation. But I wanted to put it on your radar because most people don't even know this option exists. Here's what I really want you to take away from this video. Tax strategy is not about finding tricks. It's not about gray areas. It's about understanding the rules well enough to use them fully, legally, and confidently before you spend the money, not after. Most business owners find out they made a mistake at tax time. By then, the trip is over, the money is spent, and there is nothing anyone can do. That is the difference between having someone who files your taxes and having someone who plans with you throughout the year. Filing tells you what happened. Planning changes what is going to happen. If you are a business owner and you feel like you are paying more in taxes than you should be, you probably are. And there are completely legal ways to change that. Starting right now, not next April. If this video helped you, I want you to do 3 things. First, save the video, come back to it before you book your next trip. Make it a habit to plan the business purpose before you plan the itinerary. Share this with a business owner friend because based on what my audience told me, most people do not know this. You could genuinely help someone avoid a serious mistake. If you are ready to stop guessing and start planning your taxes strategically, I have a link in the description where you can book a tax strategy session with me, totally free. We will look at your business, find what you are leaving on the table, and build a plan together. And if you are not ready for that yet, that's okay. Subscribe and stay here. Every week, I bring you real strategies, real talk, and real numbers. I am Noura Al-Masri. Thank you so much for watching. I'll see you next Monday.